Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 8.57% to 36,432. Ethereum down 10.78% to 25.99. From my 30 plus years in financial markets, I share the smart money institutional mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, I just want to let you know that the community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope. When people look at markets like we're looking at the market today, the majority of people will be really scared. So why is it that the smart money mindset, the institutional money mindset, is so different? Baron Rothschild said, "Buy when there's blood in the streets, even if the blood is your own." Why would he say these things? And for example, why would Warren Buffett, with a net worth of over 116 billion US dollars, say widespread fear is your friend as an investor because it serves up bargain purchases? How would Buffett and Rothschild look at the market if they were in crypto today? Would they see this and panic, or would they see this and lean in? Please let me know in the comments. And of course, please let me know how you're feeling about this particular action. Many people talk about developing diamond hands and not having paper hands, but your hands are not the issue, your mind is. Having a diamond mind is literally a license to print money, but it's really hard to come by. I created KS Zone Analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth, to help people get towards a diamond mind. In Zone 1 and Zone 2, there's panic and blame. These are the lost zones. People, when they're in Zone 1 and Zone 2, actually have an addiction to certainty, which creates a certainty trap. They want to time everything perfectly and capture as many opportunities as possible. They're addicted to indicators, but overall, the most important thing, they buy when it's green and they sell when it's red. After people have gone through Zone 1 and Zone 2 behavior, they realize that certainty is just a trap and they have to move to probability. The key thing to understand here is these are the 4 stages that every single investor and trader progresses through. There's not a professional trader out there that hasn't been in Zone 1 or Zone 2 at some stage in their life. And that's really important. If you're trapped in Zone 1 and Zone 2, there is a doorway out of that. But it's all about patience, rules, and forgiveness. Forgiveness that you can't have perfect timing. You can't have the last drop of profitability out of everything that you do. It's just a fantasy. But that is encouraged by social media influencers, and there are a lot of influencers out there doing untold damage to the crypto space. Zone 3 is all about making probability your benchmark for looking at the market. You gain as much information and data as you can. You look across everything possible. In Zone 1 and Zone 2, people only want to look at their beloved alts, and they think that the rest of the crypto system doesn't have any bearing on that alt. When we see days like today, we know Bitcoin's gravity is the absolute king of the crypto market. If Bitcoin comes down, the rest of the market will come down. This is really important to understand. Because crypto is so incredibly volatile, we have what's called a 10-5-10 volatility fund. We know the price is negatively biased, and we know the institutional mindset is always one of driving retail out of the market. So we carefully take note of what they're doing. But why and how is retail driven out of the market in the first place? Primarily, it comes down to a lack of knowledge and an attitude that's focused on the wrong dimension. For example, scammers love to say something like this: profit 100%, lose 0%. If anybody promises you this in any market at all, that person is a scammer. If they promise you early opportunities, that person is a scammer. If they say it's guaranteed to win, that person is a scammer. Just run. What happens in Zone 1 and Zone 2? People don't do the learning. They don't sit down and do the hard work. Instead, they treat crypto as just like a casino, and they think their number will always come up. After all, they've been told by these scammers that that's the way crypto works. We know crypto doesn't work that way. After 30 plus years in financial markets, it boils my blood to see these people misrepresent crypto so badly. When it comes to investment, there is always a risk, and you need to account for that risk. A lot of people say, well, it's a casino and my number will always come up, so I can just go and rest. I don't need to do anything. I don't need to study. I don't need to do anything. The money will just come in and I can retire. I can get a super yacht, live in a villa by the sea, and everything will be good. And that's what the scammers sell, and it's disgusting. It doesn't happen, and it's wrong. Zone 3 behavior is not about instant gratification. It's not about a hit. It's about making money. And it's also, Zone 4 is about keeping money. There's a really big difference between making and keeping money, and also losing money, which is Zone 1 and Zone 2. The faster people can get out of Zone 1 and Zone 2, the faster they can be a financial blessing to themselves and those they love. Warren Buffett said the stock market is designed to transfer money from the active to the patient, or the impatient to the patient. The concept is, it applies exactly the same in the crypto space. You need to be really patient, and that means you need to buy when there's blood in the street. What does that mean? It means that you have to withstand paper losses. When professional traders and investors look at this market, it's one of excitement. They have put money aside, and if you don't have any more money aside, don't worry about it. It's always a question of learning, and when you learn how the crypto market works, how it can just swing around by 80 to 300%, 80% down, 300% up in some particular tokens, and that's pretty average stuff. You actually understand that you need money aside all the time, and it can take a long time for price to come down, so you need to be patient, having the buy orders just waiting in market for you to activate. Zone 1 and Zone 2 behavior don't believe in learning. It's just a casino, and they can rest and relax, and they can retire as soon as possible. On days like today, the professionals come out. So what is a professional? Professionals are dedicated to their craft. They know that it takes a lot of learning. For example, crypto technical analysis is one of the highest paid professions in the world. It can rival the earnings of doctors, lawyers, engineers, accountants, and a wide variety of other professionals that spend years and years at their craft in university. It's fantasy to think that people can just walk into the market and make money without knowing what they're doing. But it's much, much more than that. Crypto technical analysis is a philosophy as well as a skill, and the philosophy is all about chaos zone analysis. In Zone 3, we need patience and rules. We deal with probabilities and we throw out the concept of certainty. We know the price is negatively biased, so we have a 10-5-10 fund, and often that will take months potentially to action particular buy orders. We stack probabilities. We know how the economic system works, and we get as much data as we can. People sometimes talk about bear markets and crypto winter. We're like this guy down here, and it could be a girl as well, of course. We are professional snow skiers. We don't care what the particular climate is. It can be winter, it can be summer, it can be boring and going sideways. We can make money in all markets. We are professionals, and there's an incredible difference between an amateur and a professional. That's why I spend an enormous amount of time helping you to understand that you can always buy lower. This is really critical. And when it comes to things like crypto winter, I will show you what that looks like. And it's not as bad as so many people point it out to be. And why do they talk about crypto winter? I believe it's because they have a retail mindset. They're stuck in zone 1 and zone 2, and they haven't invested in their knowledge. There are enormous opportunities in crypto winter anyway. I think the problem is that many people think that they can only make money when the sun comes out, and that's because they need the skills. It's like saying the whole human race doesn't live anywhere where there's winter. They avoid winter. Maybe they shift to another country when winter is coming around. Maybe they don't live in cold places, and we know that's absolute rubbish. The human population is all throughout the globe. It lives in every single condition, from the deepest, darkest, coldest environment to the hottest environment on the planet. It doesn't matter. People are everywhere. Just to say that people can only come out when the sun is shining denies the fact that there's sunlight and daylight. I'd like to talk to you a little bit about black swans. Black swans are really important to understand. We've had an absolute barrage of black swans recently, and this has been the thing that has been suppressing the price in the crypto market. I'm going to take you into this particular black swan that happened on the 12th of March 2020. It was the COVID and US liquidity crisis. I want to explain what happened there and what happened after. Let's start with the headline news story. Over 30 days, price came down 63.34%. And then what did it do? Over double, basically double that time. It came up 161.66%. As people were abandoning ship, closing their accounts, running for the hills, what happened? We struck a particular line of support and we were held by that. Price didn't go too far below it, but we always buy these falling knives. That's what we do as a community because we understand this mathematical relationship. If something comes down a specific percentage, it typically goes up double what it came down. For example, down 63.34%, and to this peak up 161.66%, while most investors and traders who weren't professional, most retail investors and traders would abandon their positions here. This is where the professionals step in, and you can see why. They know the math. They've run the numbers. So how does that compare with so-called crypto winter? When people talk about crypto winter to retail investors and traders literally run for the door. What a great shame and what a great mistake. When you look at bear markets, crypto winter, yes, we do have particularly harsh percent withdrawals on price, but they are always followed by rallies. For example, down 43%, up 54%, down 46%, up 41%, down 54.64, up 98%, down 21, up 26, down 37, up 25, down 30, up 54. That is, you just witnessed crypto winter. What winter? I don't know, maybe it's me, but I just look at these particular influencers just talking about doom and gloom, and they're just like the news headlines. They want to do sensationalistic pieces to get people to click on them, and unfortunately they're not there for your advantage. They're not helping you. They're actually harming you, and this is why I started the channel in the first place. I saw so much damage being done by influencers out there. I just wanted to help. Let's look into the black swan behavior that we saw previously when the China miner issue hit. From the 13th of April down to the 22nd of June, we had a 55.93% reduction over 70 days. That was followed by 141.26% increase. When we look at the current price, If we're actually anticipating a 55.93 reduction in price, we're going to have a price around 30,000 and just a little bit more with change. You can notice this particular green band. This is the support band of crypto. This is the real support band. If there is a black swan, for example, and it pushes down, it will be captured by this green line. That's currently sitting at 26,037. I'm not saying we're going to get one. I'm just saying that it's within 28% of the current price now. It's not that far away. And if you think about how long crypto has been coming down, it's been coming down for quite a few days. Let's just organize this. So what do we see here? Crypto over the span of 73 days has come down 48.54%. And if we do get a black swan, if for example the things that are happening with Russia and Ukraine, maybe the Fed with interest rates, maybe whatever other source, we don't really generally care too much about it, because we understand that these big reductions actually create even greater increases in price. They always have, and it happens throughout the entire history of crypto. We just know the numbers. That's why we run the numbers every single day. Some people have reached out and said, Ken, why don't you just do a single coin? Because I don't want you to lose your money. When it comes down to actually understanding how crypto works, you must zoom out. If you don't, you're at peril. If you think about what happened with crypto winter from the last bear market, these big percentages are just what we see normally, and they reverse often very, very strongly. But why do they reverse? The first thing is it's a fact that they reverse because so many people have lost so much money that it becomes really, really attractive for people to lean back in. And when shorts get liquidated, of course, it creates upward momentum in price. So the question is, what are black swans? Black swans are systematic impacts on the financial system globally. They potentially push price down to a specific point and then price rebounds. Black swans abound. They are just part of market structure because the world is at war. Someone is always trying to grab something from someone else, unfortunately. They don't follow the concepts of real wealth, again, unfortunately, because it's not taught. And one of the things, people follow the object of greed. They always want more. And the problem with that is that it creates so much incredible conflict and so much needless conflict throughout the entire world. There is a better way to live. As a community, we understand that the crypto market is really, really volatile. Prices are negatively biased, and that means we must always place our buy orders as low as we can go and layer into specific trades. On the 14th of December in the masterclass, I did Ethereum trades, and that's at TG18 and onwards. If you're in the masterclass, you can have a look at that. The really interesting thing here is that we had a very harsh withdrawal on price, and then it was starting to come up, and we know what happened. It came down. But the concept of all of this is, have a look at the buy orders that were placed. They are still in play. In yesterday's episode, we did a little bit of analysis as to what could happen if a black swan hit, and I believe we've seen a minor one. And I mentioned yesterday that we could potentially come down to 30,000. If we do around 30,607, if we do come down to that price, that's just a fantastic time to lean in. Remember when we looked at the COVID crisis, that really big steep sell-off? These are opportunities. They're gift-wrapped opportunities. A lot of people look at it from a retail Zone 1 and Zone 2 perspective, but when you look at it through the eyes of Zone 3, you feel very, very differently. You know what Warren Buffett is talking about and Baron Rothschild. you lean in. And that means that you can have a look at the red in your portfolio and say, I know the mathematics. For example, when you see price coming down like this, what I see when I look at this is, wow, Bitcoin is on sale, 8.32% discount, and Ethereum 10.5% off. It's like you go shopping at one of those special shopping days and you're getting everything more cheaply. That is the way that we have to look at it. You've been across a bear market, that brutal crypto winter that wasn't brutal at all. If you know and have the knowledge how to trade, you can make money in any single market, and it's not difficult. It just requires patience and you to have the right mindset. The mindset is really, really important. If you're in crypto, please pay attention to Rule 14. Until an expert, buy at spot. Buying at spot means that you actually own the crypto. You're not under leverage. You're not partaking of a derivative. You don't have anything other than ownership. Having ownership over crypto is really, really important because price can just fluctuate so wildly. What actually happens when people are under leverage and their positions move against them, they can get what is called liquidated. We can see over the past 24 hours, we've had $1.08 billion worth of liquidations occurring across 268,933 traders. This is really sad because these people need the money. When people seek to actually magnify the amount of money that they have without the learning, the house, the casino will take the money because you're going up against professionals. You must have the knowledge. It's really, really important. I can't stress it enough. Over the past 24 hours, nearly 86% of liquidations were long. That's why I always say, please, until an expert, buy at spot. If you buy at spot, you can just wait out any particular negative momentum in the market until it turns positive. It's the way to go in crypto. It's absolutely critical to do. Turning to the Crypto Fear and Greed Index, we can see extreme fear in the market. Extreme fear is the ultimate time to dollar cost average in, but we always layer our buys successively lower and lower and lower. We're seeking to pick up basically extreme panic in the market. When somebody sells, somebody buys, and when it's really, really incredible levels of fear in the market, only professionals are buying. And unfortunately, retail investors and traders are actually selling at that time. That's exactly the wrong time to sell. Just thinking back to the bear market of the last cycle, we can see the price was always going up and down. It rallied substantially, and that was Bitcoin's price. You imagine the alts, they exploded when Bitcoin took off. And this is the thing to keep in mind. If you're buying at spot, you're safe. You can just hold. But you need a really strong mind, a diamond mind, to actually hold on to your crypto, because all these influencers are out there saying, it's the end of the world, it's the end of the world. What they're really saying, click my thumbnail, click my thumbnail. It just really makes me sick. Looking into the main markets, we can see the US market had a spike in fear, and we can see that the Nasdaq came down and it's just currently below that level of support. When we look at these things, we just say we understand that markets fluctuate around, and when it comes to the stock market, it tends to move really, really slowly. When we look at oil, oil is coming up. If we were expecting a wholesale crash, oil would be plummeting. When we look at bond prices, if we're expecting a crash, we would see bond prices exponentially increasing up the wall. We don't see that. In fact, we've seen the exact opposite of that. Bond prices have been coming down. And we can see yields, and we know they're inversely related to each other. Yields have been coming up. They're just doing a natural price cycle at the moment. What about gold? If there was an imminent outbreak of war, gold would be going up the wall. It is not. It's just slowly making its way up, getting above resistance, coming back for a retest. The next target level is 1867. So if we look at this, we're not seeing the normal behavior. For example, oil collapsing, yields collapsing, bond prices just going parabolic, gold going parabolic, the dollar going parabolic. We're just not seeing these signs inside the market. That is absolutely why we need to stack probabilities. Does that mean we're safe? We can be certain of something. If you said that word certain, you're in trouble already. Everything is about probability. The probability is that it's business as usual. There's just a bit of short-term volatility inside the market. You cannot be certain of anything inside markets, and especially inside crypto, but we do stack the probabilities for this reason. When looking at the precious metals, we can see gold getting over a level of resistance and starting to make its way up. We can also see silver has got across a level of resistance and going up. We can see Bitcoin has been plummeting recently. Let's have a quick look at the news stories. There will never be more than 21 million Bitcoin. What is this actually saying? Don't forget to like and subscribe. That's from there. Okay, what does it mean? The supply of Bitcoin is limited to 21 million. As soon as that supply is gone, everybody will have to bid price up to take it out of somebody else's hands. This is really important, but the more important thing is, what does crypto represent? Many people actually don't know. After all, isn't it just like a casino? It's just another game like, I don't know, blackjack or roulette or something like that. No, it's not. Crypto is the ownership layer of the next evolution of the internet, and Bitcoin was the starting point of all of that. When governments talk about central bank digital currencies, they're talking about using blockchain technology, the very technology that Bitcoin is based on, to issue government-denominated digital currency. And the governments can say, crypto is bad, but we're issuing our own. Wow. Does that make sense to you? When you understand actually what crypto represents, it takes on a whole new meaning. But as with all things, if you don't understand what you're investing or trading, it can be really dangerous. The most important thing to know, crypto is not a casino. If it's a casino, the house will always win, and the house is not you. You want to win. To do that, you must have knowledge. I'd just like to let the masterclass students know that when you reach TM2, you'll get a copy of the KS model. I've updated that. You'll get a copy of my live chart. The reason I refer to the KS model is that Bitcoin is going up over time. We have a limited supply. It's the ownership layer of the next evolution in the internet of money. And one day we're going to leave this planet Earth, to colonize interstellar space. It will be incredibly important. Digital currencies will reign. Okay, returning to the news. This is really important. If you understand what Bitcoin represents, you'll understand why it's so good to accumulate, especially at these discounts. Bitcoin falls 9.3%. That it did. Ooh, double. MicroStrategy plummets as SEC rejects its Bitcoin accounting. That could be a bit of an issue. We'll look into that in later sessions. Market may be suffering, but Bitcoin and Ethereum will pull back stronger, Bloomberg analyst says. Absolutely. The long-term prospect for crypto is just unbelievable. For example, when society knows that crypto is all about the ownership layer of the next generation of the internet, they'll say, hang on a second, we've got all these countries doing central bank digital currencies, and that's from blockchain, and that's what cryptos use. Okay, so central bank digital currencies actually promote Bitcoin and Ethereum and all the other cryptos as solid investments. They actually know this. The government is just trying to open a window to get through before people catch on. Marathon Digital, buy the dip before Bitcoin fear turns into greed. Of course, all professionals buy dips, and the redder the better. That's what we're all about. Crypto prices nosedive, wiping out billions in value. I imagine when retail investors read this, they say, oh no, I need to sell. Oh, Bitcoin lost 11.36%. I need to sell. I need to get out. I need to get out. Yeah, who's buying on the other side? It's the professional and institutional investors. They're the ones that are buying. They have no problem with buying the blood in the street, even if it is their own blood. Please keep that in mind. Michael Saylor, if you're selling Bitcoin, he's buying. And the SEC does it again. Everybody's favorite government institution has again rejected another bid for a spot Bitcoin exchange traded fund. Oh, aren't they nice? Bloomberg, your evening briefing. Bitcoin evangelists look into the abyss. This is just normal Bitcoin price action. When we have really high levels of turbulence in the market, we know the price can come down really harshly, absolutely. But when it comes back up, it powers up. 50% decrease, 100% increase. I know, I'm buying. I believe in crypto, we're entering a trader's market. When you know how to trade, everything is different. You can turn 20, 30%, and sometimes it does take patience. But sometimes you can just accumulate if you have an investing mindset. Let's have a look at Bitcoin. What we see is Bitcoin is coming down. It's 36,408. This pretty much confirms that we've got a bit of a black swan on our hands. But does it mean that we panic? Absolutely not. If possible, we try to lean into these things. If not, and you've bought at spot, you don't need to worry about things. Just let natural market momentum play out. And of course, experts do not know your needs. So whatever you feel you need to do, you should do. But please do not let fear be your advisor. Let probabilities be your advisor. Ethereum. We can see Ethereum has dipped below this 10.510 level. This 10.510 level was set up about a month ago, 28.32. You can see just how volatile crypto is. We set that 10.510 level up before we just got through this particular resistance line. When we look at these things, this is all about understanding crypto is really up and down. It can vary wildly. Looking at Binance Coin, it's currently 386 and it's lost its particular support line there. Looking at Solana, it's coming back to a support line and it will hit that at around $93. We can see ADA, Cardano, went for its resistance, was rejected, starting to come back. XRP is under resistance, coming back to its support line. It will probably hit 58.25. We know the prices are negatively biased, so we just say, well, this is a part and parcel. If you are a long-term investor, this is the absolute ideal time to lean into your trades. But leaning in means place many layers below the current price. Let's have a look at DOT. DOT has been collapsing. It's now down to 1965. It's under a level of resistance. Luna has been holding up really well, but of course it's been shaken and stirred a little bit. But we know Luna is very spiky by nature. It's really interesting that we saw Luna surge and then just drop back, literally erasing most of those gains. Then surge up, surge back. This is crypto. If you understand the volatility, you can work within it, and that will make you more of a financial blessing to yourself and those you love. So what is happening here? It's Rule 45. No alt can escape Bitcoin's gravity. If Bitcoin's gravity goes down, it will drag 99% of the crypto market with it. There is typically 1% that escapes, but gravity is gravity. It will get it eventually. We can see Bitcoin's gravity playing out on Doge as well as AVAX, SHIB, and Matic. Bitcoin's gravity is pushing the entire market down. You can see that association playing through there. I'd like to give you a bit of an insight into how volatile crypto is. What we've done here, we've just looked at rows over a 3-month period, and these particular trading patterns, it's gone up by 300% in 1 quarter, down by 75, up by nearly, well, 567, and down by 85, down by 80, down by 85, down by 67, down by 49. This is not stock market or forex investing. When it comes to crypto technical analysis, we have to have specially designed tools for the crypto market. You can see also the uptake, plus 300, plus 566, plus 421, plus 600, plus 200, plus 97. I believe the ultimate way to do anything in crypto is to actually trade. But that's all about having the knowledge, having the mindset, stacking probabilities, and not caring what's happening inside the market. This is really common behavior across many different alts. It's good to keep this in mind. When people are buying under leverage, if in any 3-month period you could have a 75, 85, 80, 85, 67, 50% drop, what chance do they have? This is exactly the reason that we buy at spot. We don't need leverage. Something that goes up 300% in 3 months, and the next quarter goes up 566%, up 421% in the next quarter, or up and down depending on where you bought. But the concept is, why would you ever need leverage? Crypto is already leveraged beyond all measure. Let's go through the next day. We can see Bitcoin Cash really weak, under pressure. Tron is selling off. Decentraland Mana selling off. It's all Bitcoin's gravity. You can see Axie Infinity, Bitcoin's gravity. VET, Bitcoin's gravity. FTT, Bitcoin's gravity. Cosmos is being pulled down by Bitcoin's gravity as well. Let's have a quick look at Rose. We covered Rose a couple of days ago. Yesterday we covered the Russian news stories. What I actually saw is I said, I'm not in Rose. And then I thought, why aren't I in Rose? This looks quite interesting. So when price was around here, I started to layer buy orders in here. For example, one at 44,562, one at 42,821, one at 41,371. You get the idea. Here and lower and lower and lower and lower and lower. This is what I call leaning in. Now, why do we lean in? For example, if we set a sell at this particular resistance level, because we know resistance acts as a ceiling, and you can get horizontal resistance levels as well, that particular 44,562 could make around 16%. But what is the percentage if we just bought at that lower one using mathematics on our side? 20.69%. Well, that's not bad. What about if we buy even lower? It's nearly 25%. What if we go lower? Now 30%. What if we go lower still? What about if we go lower down to, for example, this 50.68%? Wow. What if we go lower? 63%. Lower, around 74.5%. What about lower to that level? It's always hard to get on those levels. Around 98%. This goes to show you that when you layer down, this can be really profitable. And we know that Rose is quite a good player. It has a lot of positive momentum inside its chart. Now, does that mean the price can go lower? Yeah, of course, it can. Does that mean we'll get a sudden uptick in price and all the reds will turn to green? Yeah, that can happen as well. But what is happening right now? Rose is in loss. It's going down. And that is what it's all about. Professionals must be able to withstand red in their portfolio because they buy when prices are going down. You can't have profit when prices are going down. You have to have losses, but those losses are only on paper, and that's the critical thing to understand. The masterclass students who have gone through the trigger section know exactly what I'm talking about when I lean into a particular crypto, but I just wanted to share it with you. If you're not in the masterclass, this is a way of leveling in, of layering in, and you can see the reason that we do it. It's very, very profitable. You always want to layer in, but it may take some time, and that's why you need patience. So you must have your targets in mind, and you must know what you're doing. You'll find the community members talk a lot about the masterclass. If you'd like to understand where the masterclass is, it's at www.cryptotechnicalanalysis.org, and it's always in the description of this video. This is the reason. There's a little video on testimonials as to why I created the masterclass, and a few members of our community have reached out and given feedback how they have found the masterclass as well. It's a fantastic thing, the masterclass. It's me sharing my 30 plus years in financial markets and a very specific technique that I developed to do candlestick analysis on crypto that's beyond anything that's ever occurred in the stock market or Forex. It's technical analysis for crypto, 100% for crypto. Our community embodies crypto technical analysis as a skill, but also as a philosophy. We have the smart money institutional mindset. When we look at red like this, we see the opportunity inherent. Hopefully I've shown some of the ways that the crypto winter myth can be absolutely debunked. It's not crypto winter. What it comes down to is knowing how to trade. If you can trade, you're going to invest far, far more effectively. Maybe in the comments today, we could talk about crypto winter and what it really means. That would be a very interesting thing to talk about. And I want to thank everybody for their comments yesterday. What an incredible, beautiful community we have. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, including the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.